Good morning, everybody. It's Chris from Serene Education with the 4 Majors Analysis Update for the 13th of May 2013. Hi, folks. Hope you had a fantastic weekend with family and friends. I'm just going to be starting off with the 4 Majors this morning, starting with the Euro against US dollar as per usual. And we'll be using our FX8 Ultimate template. It's this little guide box down the bottom here on the bottom right. It's going to give us all our potential signals. So let's crack on. So let's have a look at the euro and see how she did last week, how she finished up last week. Trading last night indecisive, but last week pretty much falling, however pulling back slightly towards the end of the day. And this morning very tentative trading. However, all this taking place below a price support and resistance level in the shape of this little area here, this consolidation range here. One thing to notice is this 38.2 fib retracement here is the all-time or the monthly fib retracement, and therefore a major support and resistance level, and we are now trading below that, so not a really good signal. We had a bearish engulfing candle on Thursday which really took away all the sentiment that we saw price moving to the upside and reattempting the 38.2 fib weekly support and resistance level higher. In doing so, this bearish engulfing has pushed price lower, and you can see price now consolidating at the underside of a price support. So intraday we want to see this area now actually becoming a resistance level for price. The RMO and the MACD are below the zero lines respectively on this time frame, the daily. If you look at the indicator box, there seems to be more negativity in mid-center. The daily, the 4 hour, the hourly seems to be carrying a lot more negativity than the other time frames. The monthly is still pretty much showing some upside without the sentiment behind it. Bit of blue intraday. We've seen a slight consolidation range on the intraday time frames. But if I go to my 4 hour in particular, we can see straight away on a 4 hour we have a sell signal with sentiment in our favor. So that's one. So as long as you can see it's trading below the institution, which is important. All the moving averages are above price. So as it stands at the moment now, we're trading below the institution for the first time in as many months. We haven't been above this level, below the institution, apologies, since early March. So we're back below it again and back below this consolidation here. So what we want to see now is actual resistance now to be forged below this consolidative range. So along this area over here, intraday, we want to see price now finding resistance. Building on the resistance, we know a very nice bearish engulfing counter would suffice to look for an entry signal. And if we do get that, then ultimately our next target would be to these lows we saw here recently, roughly around the 1276.50 mark. And if that's the case, we're also heading off towards that important 23.6. So there's a lot of support at the bottom here, and we're looking roughly between where price is trading right now and these levels. You're looking at 200 pips to 241 pips. So there is enough in this target to the downside to see us through for this week in particular. So look for that negativity intraday to stack up with what we need. It's all looking negative at the moment now, so let's look to see if we can get a nice bearish engulfing candle. As you can quickly see that the candles intraday are quite indecisive. Small trading ranges. We don't trade in the indecision, we want to trade decision. Nice bearish engulfing candle would give us that sentiment in this case because price is falling lower. So let's look for that all important indication at candle, and then we'll trade to the downside. On to sterling. Let's have a look and see what's been happening on this particular pair. Same as the euro, saw a bit of negative sentiment on Friday, slight pullback towards the end of close. The Sunday evening open, very indecisive, and you could still see very indecisive small candles. Testing this uptrend now, the intermediate uptrend. The institution moving average still above price, acting as resistance. You can see that intraday we see a lot more positiveness, as you see a bit of buying power coming through. However, the sentiment on our long-term templates are showing still a lot of negativity. We're still below the RMO, the institution moving average. RMO is below the zero, MACD is below, and the daily is looking very much negative. However, we don't have the sentiment genuinely in our favor to the downside because the R squared is still red. So as it stands at the moment now, this 23.6 fib retracement here in the red line is the long-term support and resistance level. So we need to get below that if we don't see any further negativity. This pair has been making higher highs, so as long as it stays above this 23.6 here, this red line, then we should look for price to potentially start forging out a support area, another swing. We've seen swing high, swing high. We are on this area now where we could potentially see a swing high. We've got to look for that because we don't trade in decision. We want to see a decisive candle, whether it's up or down. Ideally getting above the 38.2 here on our intraday time frame. So look for price to actually break and close higher than this the 1539.7 above this area here. If we see a nice bullish engulfing candle close above this area here on our 4 hour in particular, then we should be looking at this potentially as a nice strong support on our trend line, and then we should be heading up towards this 50% line here, which constitutes to our long-term prior support and resistance level high, which is a good 178 pips away. Failure to see a bounce over here. The other thing we could do is look for this price support area over here to be broken, ideally the 23.6 long term. If we do see that, then ultimately we should look to the downside, and we could be looking at areas such as this little consolidation area here to the downside below, which is a good 110 pips away, and below that the all important fall to the next fib retracement area, which is you're looking at another 345. So there's enough negative sentiment on either side or strength or target area. We just need to see a confirmed. We're trading at a trend line support here, and you can see the institution now on our 4 hour. If we do get a bounce and a close above the 38.2 here in the shape of the 1539.7, then we should be looking upside. If we close below this 15,300 mark here, then target the downside. Onto the US dollar Swiss franc. Here we've seen a lot of positiveness from the US dollar, and we saw price breaking higher than this consolidated range. There's clear resistance above price here, as you can quite clearly see. If you look at the indicator box at the bottom here, we are, like the euro, seeing a bit more sentiment in the mid-range than either on the long term and the short term. A bit of buying sentiment coming through, and that's punched through this prior resistance level. You can see on 3 separate occasions price actually failing to rally above this area here, which constitutes a real resistance level. However, on Friday we saw a nice punch above it, slight pullback, but now if any consolidation occurs and it happens above this resistance level, the prior resistance level, then we're looking at potentially seeing price forging out of support. RMO is above the 0, MACD is above the 0 on a daily, and still getting stronger, okay, which is important. You can see that on the daily and the 4 hour, we're still seeing that buying sentiment. The sentiment intraday, however, is one of consolidation, and especially on our 5 and 15 minute, you can see that the R squared is complementing the negativity on those time frames. On the 4 hour, we have that buy signal as I mentioned. However, we're seeing consolidation, so if we were to buy on the 4 hour, then we want to see a break of the prior highs, as you see now. But as long as it maintains above this area here over the next couple of days and a fine support here, then we should be looking for entries to kick on to the upside and back up towards this long-term support and resistance level here in the shape of my monthly 23.6 fib retracement area. Above these highs here to this level, you're looking at 120 on pips. So get a break of this range here, this consolidated range above this price support and resistance level, and we got enough on the plate near term to see us through. Get above this 23.6, the monthly fib retracement area, then we can head to the daily fib retracement area, which is a good 258 pips away. So there's a lot of sentiment, or a lot of pips to the upside. We just got to be patient now, wait for consolidation to be forged here, and if the US dollar is still looking strong against its counterpart, then to push on to the upside. Last bit of the day, the US dollar Japanese yen. Here you can see that long-term support and resistance level here in the shape of this 99.50, which happened to be the monthly fib retracement area, has been breached. Okay, a lot of resistance here. We had the same thing over here going into our 38.2 not too long ago in January. A lot of resistance, the breakout, the pullback, and then the actual continuation higher. We did this exactly the same thing now, heading into this 50% line and failing to break it now. Resistance, pullback, wanting to go higher, reattempt, pullback, wanting to go higher, and each pullback took us to a prior resistance area, forging a nice support. All the moving averages, everything was telling us to still go along. The candlesticks were still all blue, telling us we should be looking for further attempt to the upside. RMO did dip. That's understandable. But when we got the sentiment, the movement that came with it, which is exactly this candle over here, you can see price on Friday, on Thursday's candle, price on Friday headed higher. Slight consolidation now over the Sunday evening open on the Asian session, and as we speak at the moment now, a slight pullback to continue. That's taking up the 5 and 15 minutes. We're having the R squared, which is looking potentially strong, especially on our long term, but also on our negative 2G intraday. But as long as that consolidation now happens and we see more support being forged and price remains above 50%, we should be looking for upside for the remainder of this week. So look for opportunities to buy on the pullbacks and then head up to your prior highs and then the higher high. At the moment now, we should be heading to our long-term or next target, which is all the way right up here. And where price is trading right now to this level, you're looking at 400 pips. So there's more than enough in the tank to see us through for the next couple of days or the week, as long as we maintain above 50%. Very, very important. We've broken this major resistance level, which is a strong indication we should be looking for further positiveness for the US dollar against this particular pair. And if that's the case and everything still stays good and R square still complements that buying sentiment, target that 61.8 now at the upside, which is roughly around the 10.5537 mark. So, and that's a good 400 pips away. So a nice target to the upside, guys. That's it for today. Short and sweet. Have a look and see if there's any fundamental news out there, guys. We had some figures last night for the Chinese markets. Industrial production year-on-year figures came out. Not as positive as they forecasted, but still better than the previous figure, which is still very, very good. The previous was 8.9%. They forecasted 9.4, and it came out at 9.3. So only 0.1% difference. I don't think that's really going to change anything. This is still seeing a lot of buying. The production figures got higher, which is good. And if everybody starts seeing that the industrial might that is China is starting to turn, then there's going to be a bit more positive sentiment throughout Asia, but also the globally eventually, because they are the industrial the makers of production powerhouse at the moment now, and if they're turning, that means people out there are spending money. Then we have Eurogroup meetings. We had G7 this weekend. They talked about tax evasions, avoidance schemes. They're going to really crack down on people who are avoiding tax throughout Europe, which is important. We also have Eurogroup meetings all day today, and then this afternoon we go into the US news. We have core retail sale month-to-month figures, which is important. They're expecting a contraction there. Retail sale month-to-month figures, they're expecting a contraction there. Business inventories, which is also important. Then we have later this evening we have the retail sales quarter-on-quarter figures for the New Zealand market. So a bit of news out this afternoon. We have the Eurogroup meetings all day after the G7 meetings. So it'll be interesting to see what happens. But we've seen a bit of breakout. We've seen a bit of movement for the US dollar against most of its counterparts. We just need to see now if it can crack on now. It's broken a lot of prior support and resistance levels. It needs to forge out support and resistance levels going forward. Once it can do that, then we should be targeting the new highs or new lows for those particular pairs. Otherwise, I'm going to leave you to it. Please back this particular template with sound money management. And if you are interested in trading or using any of our tools, our indicators, templates and stuff like that, please give us or drop us an email at info@sereneeducation.com for further information. Have a great trading day, and I'll see you first thing tomorrow morning. Until then, you guys trade serenely.